Do not ignore that risk. The stock market can take 20% of your nest egg in a bad year. The a long-term care facility can take all of your nest egg in a bad couple of years.
Mm.
And there are many ways to mitigate that risk.
What are the six core issues that every proactive financial and retirement plan must address? We'll talk about them today with Chris McIntire, president and founder of McIntire Retirement Services, your host of Your Game Plan for Retirement. Chris serves proactive planners and savers across Northwestern Ohio to have that plan that provides for lasting, enduring financial confidence into and throughout retirement, the game plan for retirement. And if you've got questions or concerns, you are always welcome to be in touch and give a call. 800-868-1184. That's 800-868-1184. Chris, first off, you've been traveling a little bit. It's good to see you again. How have you been?
Yeah, been real good. Yeah, we actually took a kind of a vacation and ran into a bobcat on our vacation out in Arizona, and then happened to be staying at the same hotel that the Vice President Kamala Harris was at. So we had to deal with more security than you could possibly imagine.
Interesting. Yeah, yeah. I imagine it was a pretty tight ship over there during her stay.
It was, and I really wanted to give her my opinion on some things, but wasn't able to do that. And I'll digress from there, buddy.
Can't get close enough. But you went to a concert as well, and took in some heat that up in this area, northwestern Ohio, kind of uncommon heat that you don't get that you found down there in Arizona.
Buddy, it was 108 degrees the day we landed there, and that's just an incredible amount of heat. And then as soon as the sun goes down, just that fast, it's perfect.
Yeah, yeah. Well, I heard somebody say it's a dry heat, and then I heard another person said, "Yes, so is an oven."
Yeah.
So it does cook you out there. It gets real hot. But glad you are back to talk about these important financial topics. And today, Chris, is going to be covering the six core issues that every plan really needs to question, examine, and address. And from a high level, income, investments, taxes, healthcare, legacy, we know that those things must be addressed. But first on your list is examining the source of information. You need to get to know the person that you're putting the plan together with. And that's one of the reasons why you do this program each and every week, I think.
Yeah, it sure is, and we do some ice breaking, if you want to call it that, when people want to come in and discuss, what we can do and offer our services and how can we help enhance what they may already be doing, or, for some of them putting the plan together in the first place. They may be, disenfranchised with their current situation, or, somebody may have just been blindly putting money into a 401k for 30 years and said, all right, now I need to do something. And, so we try to break down, look, how do you make decisions? What type of information do we need to provide for you? And, what is your level of understanding of, sequence risk, for example, in the stock market? And, what do you know about all the different types of investments that are out there? And, we obviously deal with a lot of different types of clients, some that are highly educated and very good investors on their own, and we just help complement what they're trying to do. And then we have other ones that say, look, I want you to run everything here. This is what you do for a living. Just give me the 30,000 foot level, and then I can ask some questions from there, and we can drill down into those details if needed.
Do you find, Chris, that you mentioned specifically folks that sort of had the blinders on, started the 401k, and then just kept their head down and their nose to the grind working? Do you see a lot of those people have built up a pretty substantial retirement? I was thinking about the 401k and how we're probably seeing more people nowadays that have had a 401k available for the entirety of their career, as opposed to 10, 15 years ago, where they may have started without the access to a 401k.
Yeah, that's a good point. Yeah, we certainly do. I mean, the $1 million 401ks are everywhere now. And 10, 15 years ago, you certainly did not see that because people had pensions basically. And, probably 15, 20 years ago, even. And so they had modest savings, but they had Social Security and pension income. And so, I mean, it was almost like they retired, but they still had all the income coming in like they were working basically. And, and as they paid off debts, they ended up, they were probably more savers previously than today. We now have more investors. That's probably a good definition. And, we'll see some folks that have been, just really all, 100% equities over their entire working career, where sometimes we'll run into some folks that were incredibly conservative and probably hurt themselves because of it.
Does the access to that 401k, the building up of that 401k, does the kind of advice that we receive on the 401k make a difference when we are examining this number one core issue of the source of advice? Like, are there advisors that may or may not recognize how big of a difference that makes in the retirement planning picture?
Yes, because, for those that have been, well, just blindly putting money into the 401k, they haven't considered the Roth side of things. So they probably have missed some of the tax planning pieces here. And I think that's where we come in with some of the niches we like. We're right now in the Roth conversion season, right in the heart of it right now, because it's something typically that happens late in the year because most people know how much money they're going to need to get to January 1st when we start a new tax year. And, that's where I think, we add some value to what we do, Peter.
I think it's sometimes ironic and difficult, Chris, if we get paid monthly or bi-weekly. For some folks, making the money last to the end of the month, I have to imagine that makes your job exceedingly difficult when somebody retires. They've got a finite amount of money in a lump sum, and you've got to make the plan that helps them have confidence that money lasts for 30 years or more.
Yeah, absolutely. And, we have some advanced software that really helps us, create that plan and be able to monitor it as time goes on and, tweak some changes to it and whatnot. Let's be fair, life is not a software program. There are things
Sure.
that come up in life. Somebody, you lose a spouse if you're married, sooner than anticipated, or healthcare expenditures become larger, cognitive, health issues are something hard that you have to build into the plan, and you just hope those don't happen until, typically later in life. I mean, my dad's 91, my mom is 87 and still alive and living at home. That's probably outside the norm right now.
Well, again, we are talking with Chris McIntire. And if you've got any questions or concerns, if you would like the list of the 6 core issues that every plan must address, if you would like to get your game plan for retirement put together, pick up the phone and give a call. 800-868-1194. That's 800-868-1194. I'm sticking just for another moment here, Chris, on this number one core issue of your source of advice. I hear the term fiduciary an awful lot these days, much more than I think I heard it 5 or 10 years ago. Maybe it's just me paying attention to it more, but is that an important distinction for our source of advice?
Yeah, it certainly is, and the way we like to deliver advice and try to maintain our fiduciary independent side of things is certainly adds value to the clients as well. Given the plethora of information that is out there, there's almost so much information out there. The average 401k investor would have no idea how to disseminate what is really relevant to them.
Okay. Well, there are a number of sub questions to ask in each one of these 6 core issues on the report that Chris McIntire has available. So, under that source of advice, how will you, as an investor asking this to an advisor, how will you align my plan with my goals? What are your investment philosophies? What is your experience that has shaped your approach to money and planning, and so much more? So if you would like a list of questions and topics that your plan absolutely must address, and the rest of these issues are all must address issues, pick up the phone and again, give Chris McIntire and McIntire Retirement Services a call and request request this report on the 6 core issues every plan should address. The number 2 issue on here, Chris, and really when it comes to retirement, day 1, issue 1, how do we replace income? Income has to be a core issue for any sound retirement plan.
Yeah, without question. And, one of the most important pieces of that is how do you optimize your Social Security income? Again, assuming if we have a husband and wife, we have a couple different options then because the husband could file at one time, the wife could file later, or vice versa. If we're dealing with somebody who's divorced, they may be able to actually file and get benefits off of an ex-spouse. Or if somebody's widowed, they may be able to get widow's benefits that start as early as age 60 and then switch to their own benefits as late as age 70. So, I know that's throwing a lot out there, but that's a couple of examples of,
But
the
that
expertise that we bring to the table.
and that conversation in and of itself, Chris, that can make a significant difference and impact in retirement.
Oh, absolutely. Because by, taking Social Security at 62 gets you the least amount of dollars for the rest of your life, as opposed to taking it at, say, 65 or 67, or even as late as age 70, because the longer you wait, the more money you get. And, you have to factor in all the other aspects of it. If the stock market is running and doing very well, maybe you can live out of your 401k and delay taking Social Security. That's an example we've talked about on the shows here of why you would want to wait and take Social Security later, because hey, your investments are performing incredibly well. You're still making money despite making a withdrawal. And then if the investments go south, we go into a recession or something like that, then you can say, all right, I'm going to turn on my Social Security now and take pressure off of my investment portfolio and give it time to recover, or make new dollars.
Well, again, Chris, the number 2 topic on these 6 core issues, and really the number 1 topic the first day of retirement, income. A few of the questions that an investor, a saver, a proactive planner would want to ask and discuss as they are designing the plan for income. How is the plan specifically designed to cover expenses throughout retirement? Have we optimize Social Security, as you mentioned? How are budget, income, expenses, and taxation addressed and reviewed? And then how and when will we access pensions, 401ks, IRAs? That order of operations, something that you help and assist with to help somebody optimize their income generation while controlling and managing and minimizing taxes.
Yes. And, if we're looking at, all the different scenarios, and things that can happen in life, and making plans for these, just in case events, we're certainly helping the clients, better mitigate all the different types of risk. And I like the one here, does your plan provide spousal income replacement and protection? That's something that's hugely important. And a lot of times that may involve like a life insurance policy. And, a lot of people are saying, well, I'm retired. I don't have any debts anymore. What do I need a life insurance policy for? And I would say, well, how much life insurance do you want to have on the day you pass away that you're protecting your legacy with?
Yep. And so again, these are the 6 core issues, many questions underneath each one of these issues to make sure that you have a comprehensive plan. Every plan should have documented and addressed these 6 core issues. And that's why Chris is making the list and the report available with all of the questions that would go into each of these categories. If you would like a copy of this, or if you would like to go over your plan to make sure you have addressed all of these topics and the sub questions, pick up the phone, give Chris McIntire Retirement Services a call. 800-868-1194, 800-868-1194. Now, Chris, how we got to the point where we feel confident in retiring a lot of times is through saving and investing that capital, those dollars, those accounts. So that's actually number 3 on your list here, the investments. Investments must be addressed for a comprehensive plan. Talk to us a little bit about what goes into addressing the investments for a retirement plan.
Yeah, let's start with risk tolerance. That's certainly going to begin that conversation with a client. Is how much risk can you handle? When we say risk, let's just, for simplicity purposes here today, Peter, say, if you got $1 million and it lost 20% because of market fluctuations, and it could just be a temporary loss, right? Because the market does go up and down. How would that make you feel? And is that taking too much risk where you could lose 20% of your portfolio or see it fluctuates? Probably a
Yeah.
better.
I mean, put a dollar figure on that one though, Chris. 20%, $200,000. If you saw 200,000 disappear without having spent it or having anything to show for it, right? How would that make you feel? Could you handle that? Could your stomach handle that?
Yeah, and if we go back to 2022 when they raised interest rates, I mean, the bond market fell basically 15%, and the stock market, certain aspects of it, especially the tech sector, fell more than that. And, it has since recovered. So, that's a good example of, look, trying to find out what is that balance there. And sometimes, different types of asset classes can fall at the same time, become correlated, if you will. And typically, the retiree is going to own some bonds and some stocks because they're uncorrelated, right? If the stock market falls, your bond portfolio should help support, some of that drawdown risk or sequence risk that we refer to. But if you're building an income portfolio of dividend paying stocks, interest, we use structured notes quite a bit, which is another income generator, and some option strategies that we utilize for income. We're not really worried about the fluctuation of the value. Is the income still coming out of it? So, if your portfolio fell 10%, but the income is still being generated just because, of market conditions, that the value of the dividend stocks are down, but the dividends are still being paid out. That certainly helps you, your appetite for the risk side of that, because you're living off the dividends, not the value of the stock having necessarily to go up.
And typically, Chris, when we move toward retirement or in retirement, we do decrease that risk exposure, that equity, stock market volatility exposure, and go more toward the bonds, which should be a little less volatile, a little bit more stabilizing, generate the income. That's one of the reasons for that traditional shift and approach. But it does not remove volatility, and I think that understanding the income production, as you just mentioned with the dividend producing stocks, is an important component in understanding that total balance as well.
Yeah, absolutely, buddy. When interest rates went up, it got a lot easier for the more conservative investors to generate some income in CDs and money market accounts and fixed annuities than it has in many, many years. And now we're seeing that interest rate environment come down a little bit. And I read this morning in the Wall Street Journal that there is still $6.8 trillion in money market accounts. 6.8 trillion. So as interest rates fall, if they continue to go down like everybody is predicting, then some of that money may end up leaving the money market accounts and looking for better growth potential in stocks and the like.
I guess, Chris, in reflecting on that, all of these topics really are interconnected. These are six core issues on the report, but it's not like any of these are standalone. And I think that's why maybe it's so important that you're emphasizing that all of these issues must be specifically addressed to have a comprehensive and confident plan for retirement. The investments help to generate the income, but the income being generated dependably is what's going to allow us to take investment risk and maybe see some volatility. And then, of course, we've got to worry about taxes from the income and the investments along the way as well, right? None of them stand alone.
Yeah, absolutely. A lot of these things tie in together. I mean, I know when I'm doing our investment plan for Robin and I, we're looking at the tax side of things and where does it make sense, which bucket to put that money into, the taxable bucket, the tax deferred bucket, the tax free bucket, and then different types of investment strategies within those buckets. So, it can be somewhat comprehensive, and the more dollars that you have, typically you're going to have a more comprehensive plan. If you're, retiring with a husband-wife combination with $500,000, in 401k accounts, and you're both going to have some Social Security benefits. That's not the most elaborate plan in the world there. That's your, I don't want to call it cookie cutter by any means and sound derogatory, but that's a different investment approach than somebody that's got 1.5 million that can take some different types of risk, Peter, if that makes sense.
Sure. Yeah. Yeah. More complexities and more options available at certain levels and stratas and in different wealth amounts. So, I mean, for example, Chris, there are commercials I hear for this is an opportunity only for accredited investors, right? That would be something that
Yeah.
doesn't apply to everybody. But I think everybody, what you're saying here, the overarching theme of this program should have a plan that still addresses these things regardless of that wealth level or the complexity of their plan. Everybody's going to need income. Everybody's going to have investments. Everybody's going to pay taxes, which is, I know, a big area that you help focus on to minimize that cost and expense.
Yes, yep, absolutely. And we don't want to make this sound too complicated for some of the folks listening today, but we don't even have investment minimums at McIntire Retirement Services. A lot of firms say, look, if you don't have $500,000, we don't want to talk to you. I want to be in front of people that we can provide some value to and people that we want to be in front of. I'd rather have a good, healthy relationship with somebody with $200,000 than an unhealthy relationship with somebody with 2 million.
Well, if that person with 2 million is overpaying in taxes, that's pretty costly. Whereas if somebody's got 400, 500,000, Chris, but you can help them be tax efficient and keep more of their money. I mean, I think regardless of the wealth level, somebody's going to appreciate that aspect in planning that I actually hear a lot of people are not receiving. Chris, I hear a lot of people saying, well, I'm getting investment advice, but my advisor tells me that they don't do taxes or that I need to ask somebody else about the tax implications of the investment. To me, that seems like a big hole and oversight in the planning.
Yeah, it certainly is. And, it can be an ego-driven industry, obviously, as well. And, I think we kind of like the down home approach, grew up in a small town, and I just think we have that small town mentality in providing the service. Somebody calls on the phone, we actually pick up the telephone. We don't send out text message reminders. Those things drive me crazy. My dentist sends me 8 reminders of my appointment, and the dentist isn't looking at any of that. And
I
but
mean, to be fair, they ask, "What are you doing on a Monday afternoon at 4 o'clock 6 months from now?" Right?
yeah,
That is a little difficult for most people to
yeah.
put exactly on the calendar on the schedule, right? Chris, we only have a couple more minutes here, and I don't want to miss any of these six critical core elements. So, number five on your list, healthcare. Everybody should have a documented plan for healthcare in retirement, although there may be no perfect solution here.
Yeah, you're right. Healthcare, obviously changes as you go into your retirement. You may have retired at age 62 and you're paying for your own health insurance until you get to 65. You transition into Medicare. And we have several good referral partners that we use to help people make that transition, select the right Medicare plan for them. And, it's obviously here in the general enrollment time frame right now. So you're seeing a lot more of the Medicare commercials because they can do their marketing right now. And then, there's the long-term care side of things as well. Healthcare isn't just health insurance. It's what happens if you go into a nursing home for 3 to 5 years and it's $10,000 a month. How are you going to pay for that? And does it make sense to mitigate that strategy with some form of an insurance for that?
And Chris, I mean, people talk about the problems with expensive long-term care insurance and how high those premiums and costs are and how those companies can increase the costs down the road. That a lot of people have experienced that. But that doesn't mean just because that particular approach maybe not for everybody. It does not mean that we should ignore planning for the potential cost of long-term care expenses.
Yeah, that's exactly right. Do not ignore that risk. The stock market can take 20% of your nest egg in a bad year. The a long-term care facility can take all of your nest egg in a bad couple of years.
Mm.
And there are many ways to mitigate that risk. And, I would go through and understand what are the pluses and minuses of all of the different types of plans that are available. And the industry has evolved from traditional long-term care insurance to, hybrid life insurance policies now that make it much more cost efficient. And, a lot of them you can pay anybody you want to. It doesn't have to be a professional. You could pay your children who are taking care of you as well in many cases.
Which, by the way, they're probably taking time out of some of their peak earning years, so that might
Yep.
not be a bad trade-off, right? Chris, bringing it home here, we are talking about your list, the resource of the 6 core issues that every plan must address, your source of information, income, investments, taxes, healthcare, and legacy. Lots of sub-questions under each one of those 6 core issues for a proactive planner to think about, reflect, explore, ask their source of advice and advisor. So again, ladies and gentlemen, if you would like this list, just pick up the phone, give a call, and request it from Chris McIntire, 800-868-1194, 800-868-1194. The final one, though, Chris, legacy. I'm hearing a lot from people that it is not a high goal or priority to leave a great deal of wealth to their children. And I don't think that's in any way selfish, but wouldn't you rather it go to your children than the IRS or Uncle Sam or cause fighting amongst your family?
Yeah, that's a great point there. And I agree with you. And a lot of times through our experiences, as people go through different phases of retirement, those goals and aspirations change as well. Because if they're 62, 65 years old, just retiring, they're not concerned about leaving a legacy typically. They want to do their traveling and living some of their retirement and spend what they've saved. And as they get toward, 80, 85 years old, now they're more concerned about, hey, should I be giving some of this money to my children in case I go into the nursing home? So there is that transition that takes over, throughout the course of retirement where those goals and aspirations change, and that's just by, having the wisdom of experience, knowing that's what's going to happen. Because, I can tell you, I'm 59 years old, or 59 and a half, actually. I can make an IRA withdrawal now. And, I'm
Congrats,
not
big
concerned.
milestone.
Yeah, and Robin and I don't have any children. We're not concerned about enhancing any of our beneficiaries, so that they don't have to work hard, given all the amount of effort and whatnot that we've done being self-employed. But that doesn't mean that, we don't want to, leave them nothing, but we
Yeah.
just want to be very charitable, and, and we have made provisions. I have, with no children, Peter, I have millions of dollars of life insurance coverage.
Well, and the reality of it, Chris, is if we plan for lasting financial confidence, that means that we're going to have the ability to spend throughout our lifetime. Likely, there's going to be some money left over, right? So if we have taken care of our own financial confidence in planning, then more than likely there is going to be some kind of legacy left behind. Why not document your plan for efficiency, plan for that legacy to be executed in a way that you would wish in terms of your goals and desires for it. And Chris, I know that these 6 core issues, getting to know your source of advice and their perspective, we talk with you every week here on the show in an educational conversation, and that's your goal and approach there at McIntire Retirement Services to have more informed clients better understand their plan and their money, which that plan, the game plan for retirement, should address income, investments, taxes, healthcare, and legacy. That's what you strive to do for those clients each and every day there. So we appreciate the insight. You call it the game plan for retirement. That is the plan that you can receive, that you can put together, ladies and gentlemen, with the help and assistance of the team from McIntire Retirement Services. And if you would like to get that plan put together, pick up the phone and give a call. 800-868-1194, 800-868-1194. Again, if you would like this list, the 6 core issues and all of the sub questions, you can call that number again, 800-868-1194, and just request it. Or go to McIntireRetirementServices.com, McIntireRetirementServices.com. Chris, we always appreciate your time here on Your Game Plan for Retirement.
My pleasure, everybody. Have a great week. Thank you.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.